Thank you, Pradeep. Very good afternoon to all of you. I hope all of you are taking the Omni now variant in your stride, and hopefully all of us will have this behind us as we get completely immunized. I take the pleasure of welcoming you all for the Q3 FY2022 earnings conference call of Deepak Fertilizers. I hope you have had a chance to look at the financial statements and earning presentation that were uploaded on the exchanges and on our website. So I'm very happy to share that in the Q3, we delivered a 35% jump in the top line, a 62% improvement in the EBITDA, and a handsome doubling of our net profits. This Q3 performance was despite a tsunami-like virtually every single of our raw material price hike. Ammonia jumped up by 115%, phosphoric acid by 78%, RGP by some 76%, potash, coal, you name it. Some areas besides the price hikes, we were also faced with availability bottlenecks. Now, despite the challenges, the good Q3 results indicate the following 5 fundamentals. Number one is, while some products did have some struggle, from an overall basis, our end customer industry has shown the resilience of our raw material pass-through and more. This is, indeed, somewhere we see a good risk mitigation, I would say, available piece for us. It once again reaffirms the strong positive linkages all the 3 sectors that we are in, meaning agriculture, specialty chemicals, and mining chemicals. All the 3 sectors have a beautiful alignment with the India growth story. This is the second aspect that gets reaffirmed through the Q3 results. The third aspect that we see is our strategy to move up the value chain into more specialty customer segment based products in all the 3 sectors is indeed in the right direction. Be it IPF for the pharma, crop tech fertilizers for crop specific segments in the fertilizer sector and the like. So this strategy to move from commodity to specialty, also bearing the good fruits, is once again reaffirmed. The fourth aspect that we see is our drive to bring technology and digital based tools is also bearing strong fruits. As we connected with almost 17 million farmers digitally, or we drew in drones and technology based products in our mining chemical sector, all of it bring a reaffirmation that that is also a right strategic drive. And lastly, as we see our new capexes of a global scale ammonia plant and a TAN plant are all going to deliver much greater and stronger fundamentals. So from this broad kind of an overview in terms of what the Q3 signifies, I now hand you over to Amitabh, our CFO, President Finance, who can take you through sector-wise financial details. Amitabh?
Thank you, Mr. Mehta. And good afternoon, ladies and gentlemen, and thank you for joining the Deepak Fertilizers and Petrochemicals conference call to discuss the Q3 FY22 results. Our financial performance during the quarter remained strong. During Q3 FY22, we reported a total operating revenue of rupees 1,956 crores, an increase of 35% compared to same period last year. Our operating EBITDA increased to rupees 352 crores compared to rupees 217 crores in Q3 FY21. Operating EBITDA margins grew to 18%, an increase of almost 300 basis points. Our net profit doubled to rupees 181 crores with a margin of about 9.2%. Finance cost reduced considerably by 15% YOY during Q3 FY22, driven by amortization of operating term loans, better working capital management, and reduction in interest rates. Depreciation increased YOY due to one-time accelerated depreciation taken in some equipment, anticipating reduced useful life of these assets. In quarter 3 FY22, revenue increased by 49% to rupees 1,182 crores in chemical segment, comprising mining chemicals and pharma and specialty chemicals. Segment profit increased from rupees 173 crores in Q3 FY21 to rupees 319 crores in Q3 FY22, an increase of 84% YOY. Chemical segment contributed about 93% of total segment profit. During the quarter, our manufacturing specialty chemicals business recorded a revenue of rupees 381 crores, an increase of 36% compared to quarter 3 FY21. Despite significant increase in ammonia prices, nitric acid demonstrated improvement in margins, supported by both volumes, that's about 6%, and the net sales price, which is about 56%, grew YOY. Shift of global supply chain trend towards India is resulting in improved demand from nitroaromatic segment, which are used which are used as intermediate pharma and agro industry. Manufactured mining chemical business delivered an outstanding quarter with revenues of rupees 660 crores, an increase of 122% YOY during the quarter. Though volume growth was about 43% YOY, and there were also better margins. So company continues to take advantage of flexibility in its product mix to maximize the margins. HDAN volume grew by 32% YOY basis. The low density, that is LDAN sales volume in domestic market improved by 9% on YOY basis. Our value-based business model in crop nutrition business resulted in quarter 3 FY22 revenues growth of 19.1% to rupees 769 crores. Fertilizer segment profitability were impacted due to unfavorable movement of key raw material prices. NP and PK recorded a sales of rupees 515 crores, and Benzel sales increased by 77% to rupees 32 crores in quarter 3 FY22. During the quarter, our TAN plants operated at 110% capacity utilization. Both acids and IPA operated at 86% and 88% respectively. In the crop nutrition segment, that is in NP and PK plants, they operated with utilization levels of 47%, and Benzel plant operated at 36% utilization level. So the available capacity across our plants provides us headroom for future growth potential. We remain confident in continuing our growth trajectory on the back of our business vision, which is strongly aligned with overall India's economic growth. With this, we would be happy to take your questions. Thank you.